Hi guys, this is Raj Sastri from Raj Option Trading. Today we will talk about market internals. Today is January 14th, 2021. So with that, these are the few very important market internals. My first very favorite one is skew. So skew, you have to watch very carefully what skew is doing. Skew will tell you whether the out of money options are expensive compared to in the money options or not. So it's very important to watch this because if the skew gets too high, that tells you market participants are worried about market correction. So we'll go through some charts to really see some of the trends and how you can use skew to your benefit. And if the skew gets over 145, better watch out. There is a major correction coming your way. And if the skew is under 120 or up to say 130, 140, you're okay. I mean, market is, not that worried as of now. So that is skew. Next one is wall SPD. This is really, symbol in Thinkorswim. So this measures the difference between up volume and down volume. So if the wall SPD is falling, then it's a bearish sign. You got to watch out. Don't make too much long side bets. But if the wall SPD is racing, then it's a bullish sign. You don't need to worry too much. So next one is tick. So tick is very important. So it compares the number of stocks on New York Stock Exchange that are racing and compares that to stocks that are falling. Anytime you see a tick reading of plus 1000 or minus 1000, you got to really watch out. So, because the moment it's hitting plus 1000, probably it will start falling. So you can do some short bets if you want. But the moment it's hitting minus 1000, that means it's really, sold off and you can start making some long, positions at this point. But don't do a lot of them, just keep watching, and these two are very good levels to watch and start initiating your positions there. Typically if you watch tick and es, which is S&P 500 index, you can do very good swing trades and even intra day trade itself, intraday trade also. Next is dollar PCSP. This is really put call ratio, and if the put call ratio is above one, that's really contrarian. You can start taking some long trades. But if it is below 0.75, you can consider short trades. Next is TRIN. This is again a good indicator to watch out for. It kind of identifies number of advancing stocks by declining stocks, and also it divides that by volume. So it kind of gives a good indication about the stock itself, number of advancing and declining, and also the volume. If it is if it is one, then market's in the parity. The advancing, declining, and the volume also, everything is in parity. The moment it's 2.2 or more, that means volume is flowing into declining stocks. You got to watch out here. If trend is above zero, then you got to watch out. And if the trend is below zero point 0.6, more volume is flowing into advancing stocks. So trend is a very good indicator to watch. We'll go into chart to really identify this. Next one is VIX. VIX is a very good indicator to watch out for. If the VIX rallies, that's when you watch out, because you can have a stock market falling off the cliff if the VIX really rallies. Next is carry trade, as we call it. Whenever trade like the currency trade like Australian dollar, Japanese yen, where Australian dollar is a high interest rate currency, and JPY, Japanese yen, is a low interest rate currency. The moment these type of pairs, especially AUD, JPY, or even AUD, USD as an example, if they are moving higher, that means risk on. Stocks and commodities will raise because people are really trying to bet the stock market will rise. But the moment AUD JPY is moving lower, that means risk is off. The stocks and commodities will fall, so money will flow out of it. So that's one thing to watch out for. The last one is the dollar index or DXY. As the dollar goes up, commodity and stocks will go down in the price. Mainly, this is something to watch out for. Off late, we are doing well here. Dollar index is falling, which is a good sign. So with that, we'll go into Thinkorswim platform now and watch some of these indicators. And for that, let me go into charts here. So if you look at, my first indicator that I talked about is skew. So this is a chart of S&P 500. It's a 5-year chart, and skew also is a 5-year 1-day chart. So as you see here visually, let's look at one of the high point here. So if you look somewhere here, it's one of the high point. It's about 148. So you had a good heads up here in October timeframe that something is up. The skew is hitting above 145. So if you watch this out, then basically as you go into December, again we had a high reading here. Then basically stock market fell off in December. Then if you look at over here, so we are here in 813, which is 813 2018, which is 2018 August. So it hit all-time high here in this chart, about 159. And then you see what happened here. It kind of sold off drastically. This is when we had interest rate, which got raised by J. Paul, and market tanked big time. And then all the way here, if you look at 2020 here, we are in 2019 here. It hit all the way back in 12/24 2019. It hit around 148, which is over 145. So that's a heads up for us that there is stock market is going to fall off. So if you look at what happened next, we had this COVID, and stock market really sold off really very sharply. It never sold off that sharply in the near recent history. Then as you go here, stock market, VIX kind of, sorry, skew kind of went up again to 147. And we had, a correction here, as you can see. Now we are at 145, and we are actually currently around 138. 138 is kind of okay zone, but we still need to watch out because the moment it goes up around 145 or so, clearly watch out, because don't initiate any long positions. Keep watching. It's okay to do some short. For example, you can buy some short put spreads above stock price. So just keep nibbling some of these short positions and take it from there. Next, we'll go into a quick chart here, a 1-day chart, and to look at all these indicators in unison. So if you look at this here, this is a 5-day, 1-day 5-minute chart. So it's a 1-day 5-minute chart. So it kind of tells you what's going on here. So as you can see here, if you see today, which is Thursday, in the morning, the dollar wall SPD started racing. And as it is racing in the morning, I think we did kind of sort of okay on the stock market side. If you see here, as I move cursor, um, see, stock market also kind of went okay with that. But then suddenly, as you see, we had wall SPD kind of going down a little bit. As wall SPD goes down, you can kind of see stock market is also going down. ES is also going down. um, then you can watch out for tick as example. If you see today, somewhere here tick went to 7, high tick level for the day. And if you see around the same time in the ES, around 12:55, so So stock kind of started, falling off around 12:55 or so. So as the tick hits little higher range of the day, ES, which is the S&P 500, will start, falling off a little bit. Then another one is VIX, as you talked about. Stock market is high here. Um, Somewhere here, VIX is low. At the toward the close, I think VIX kind of started. Let's see here, 13. Yeah, VIX started going up, and as you can see, as VIX started going up, ES started selling off. Put call ratio is another good indication. So if we see here, put call ratio started increasing here. That means people are buying more and more put. So as the ratio got increased, ratio increased, ES started falling off. Next is AUD JPY, Australian dollar JPY. This is a carry trade like we talked about. In the morning, it started racing. As AUD JPY races, so does the ES, which is stock market. And toward the close, AUD JPY started falling off here, which is as you talked about, risk off. As the risk is off, stock market also started falling down. And next one we'll look at is I think we talked about DXY. Let's look at DXY. So if you look at DXY, same story here. DXY went high here. As you can see, stock market ES is also around high at the time, and then DXY started selling off. As DXY started selling off, you can also see ES, which is S&P 500, is also started falling off. So this is a good way to look at, as you see, doctors will always use some instrumentation to understand how the patient is doing, their blood level, glucose level, and whatnot. Similarly, we got these market internals to really see how a market is doing on a given day. Only caveat I would say, VIX, watch out a little bit pattern, don't just look at one day. As an example, if I go to these charts instead of one day, if I go to a 30-day chart, it will give you a little bit, a little better idea. A 30-day chart, you can see here, we got skew went up here. As skew is going up, you can see the ES. Around that time, as Q is up and started falling off, ES will also follow the suit. So you can look at the levels here um, and watch out whenever skew is over 145, like we talked about. Those are the levels that you got to watch out for. As you can see, there is a huge sharp downturn here, and around that time, skew went above 145. Hope this explains the market internals. Happy trading. Thank you.